Ladies and gentlemen of the crypto space, we're live on a Thursday, November 18th at 11:37 a.m. I wanted to talk today. Typically, it would have been a Thursday. I'm trying to do 3 days a week instead of five, but I would imagine a lot of folks are frantic right about now. And we've been talking. I tell you guys to expect a 50, 60, 70, 80% loss of value. And this is no surprise. I tell the wife all the time when she looks at the balance and it's up where it is, I'm like, just watch it go away. It's gonna go away. And that's not the number to look at. I tell her, here's your weekly revenue. I show her the various places. You don't really see the weekly revenue as clear as I'd like on Abracadabra, which is something that I'm sure Daniel and folks are working on. It's brought up in our private chats where, certain folks are asking for that specific feature where we could get paid in MIM. And I'd like that as well because obviously our salary on Convex is very obvious. Our salary on Geist is actually very well displayed. In fact, probably going to deploy some capital when today's price action is said and done. I told you guys I was looking forward to like 30 cent, 25 cents, 20 cent Geist. That thing's a payment machine. Um, and as the APRs of locked versus stake converge, hopefully we'll start to see the bottom in depreciative price action. But all in all, I'm sure a lot of folks are emotional. Spell's getting hammered. Hammered. My God. Let's pop it over to the main screen. Let's look at some charts. I got Luke Groman up. He's become my favorite macro analyst between him and Lynn Alden. They're so like with Raul, they're so Bitcoin pilled. They're so Bitcoin pilled. It's incredible to see. Um, and they're much more astute than Bill Ackman, much more astute from a macroeconomic perspective. Um, Specifically, his response to what Bill said. I agree. I agree with what Luke says. I like what Raul says. Lynn said something very well put that the system is so bearish that I'm bullish on the very assets that folks are watching bleed out today. And the reason everyone is in a very difficult situation today is just because of what we've been talking about. We're talking about entries. I always say I'm horrible with entries, and I know people have been taking entries last week, the week before, or this past month. I've been saying it's late cycle. So we've been prepared to watch that 30, 40, 50, 60% dip. I'm down big. What am I at? I gotta be down like 40%. At least 30%. That's my current measure. I think it's a little bit more. All right. And that is what it is. It was expected. Now watch what happens in 3 years, in 4 years. The problem is humans have horrible time horizon. When folks think in terms of days and they're letting their emotions that, oh, the number went down from a 10 to a 6 and it's overwhelming because you probably put in 10 on last Thursday and now it's worth 6 today and you lost 40% in a week. But did you? That whole unless you sell, did you lose anything? And that whole diamond hands thing, you know, I've been thinking about that a lot, particularly because and the notion of a bag holder. If someone bought Microsoft 1999 and held it through the 2000, 2001, or whatever the hell the market picked up again, they were a bag holder. But as of like today, they're rich as F. They're seriously rich. So a bag holder is a transitory state of being when you have a vision and are able to execute on a rational time horizon. And we have some precedents for what it's like to hold through some serious macroeconomic events 2000, 2008, 2020. and obviously the various events between 2010 and 2020, which are unique as from in the perspective of history because of the start of QE in '08, which, if you look at the M1 and M2 charts, exploded into a whole different territory in 2020. And that's the whole point. The whole point is we have these glimpses of these deflationary events throughout history. And there's one common theme that I've seen is they repair themselves faster and faster. So, I tell you I tell everyone that I'm prepared to watch a big number drop 30, 40, 50%. And I'm like, all right. I know where my capital belongs. That's what I tell partially the wife. And then I also tell the wife to look at the number that matters is the revenue. Like, I'm not realizing these fucking gains. I'm not paying taxes on this shit. I'm not going to realize these gains. I'm not going to cause a taxable event. I don't want to deal with the paperwork, and I don't want to make as much money as possible. There's something that I like about this ideology, and it's not diamond hands bullshit. It's not, I'm going to be a bag holder. It's, I have assets. I own businesses and I'm generating a revenue stream. I'm focusing on the right numbers. I'm going to accumulate cash and I'm going to pull a Warren Buffett. I'm going to buy the blood using my cash flow. I'm going to take debt against my unrealized capital gains. I'm going to buy assets on the cheap that other folks sold because they're fearful. All of this makes rational, logical sense. So I'm putting into context, terminologies we've heard over the last couple years. Buy the blood, buy the fear, and and I want to execute on it to the best of my abilities and just think about things differently. All right, so I like what Luke is talking about. Always follow Luke and Lynn, and I like Raul's talk, and I believe Raul's ideology very much. Bitcoin's a big deal. Bitcoin might be the biggest deal. But there's only one thing that's going to be better than Bitcoin is tech. And to such a degree that the only difference between buying Bitcoin and tech is this degree of comprehension. If you can't process the tech, you can't invest in it. If you can't understand the thing you're investing in, you shouldn't invest in it. It's dangerous. It's risky. Because you can lose money if you invest wrong. So that's the truth always. In which case, Bitcoin is ridiculously safe. Over a long enough time horizon, Bitcoin will go up, particularly because the legacy system is screwed from a historical standpoint. It's going to go in one direction from a historical standpoint. You want to understand that direction and you're trying to understand starting today, it's pretty late. It's pretty late to start and understand that, but you got to watch Real Vision. You got to listen to Raul. You got to catch up with Lynn, and you got to check in on Luke. And there's plenty of other folks. There's a lot of gold bugs nowadays that are totally Bitcoin pilled. It's so damn obvious. Let me hit some comments. I want to look at some charts. We'll take a look at Geist and see what it's doing. BCO, good morning. Costco's in the house. Daniel, pleasure. Malik, liquidator. There's so many liquidations going on today. Daniel and crew are probably going wild with Abra and liquidation. As it's going to be a payday for S-Spell stakers. Sushi, howdy. Pradeep, a pleasure. Edward, time to get out of my leveraged long Bitcoin positions. Well, if your leveraged long Bitcoin positions aren't paying you, sounds like a pretty silly position. So you could leverage long and try crypto and get paid like 50, 60%. That's a leverage position I like. So that's another story. Anyway, Britno man. Hey, Noah. What's up? Glad to catch you today. It's a pleasure. It's a pleasure. Captain, I'm a curvor in the house. Yeah, I'm certainly a curvor at this point. So it's almost half my total portfolio. Bit is in the house. A pleasure. A pleasure. I hope everything's good. It's been a bit. Jake, what are your thoughts on the dispute in regards to emissions versus profitability? Um, I don't see it versus emissions versus profitability. I'm not totally up to speed on the dispute. I see emissions as an expense, and a protocol has a treasury, so it has assets, and if it's increasing the quantity of assets it has, um, that's obviously depreciative when those assets are added to circulating supply. This has an inflationary effect on circulating supply, unless there's incentive and reason to remove assets from circulating supply, which is deflationary pressure. So it's very complicated to manage a treasury, and you really have to think about it from a central banking or a sovereign standpoint, and that's what these boys have been doing well. I think what happened with Curve and the lock-inning is extraordinary, and Convex really took it to another level, and Urine is taking is is um is delegating VE curve to convex, and it's really I just really like what I see playing out um, with Andre and Banteg and Yearn and convex and Daniel, and I like the way he's thinking. Everything looks good. And when I see a day like this come where it's highly depreciative, there's no change in narrative. Nothing has changed except what I've been tweeting about pretty much all morning is that the market will be what the market always is, filled with fearful participants that have no idea what they're doing. And that's okay because I'm going to get 0.02% of all that action. I'd like more. I'd rather not see my portfolio down 40%, but that's okay. That's not the number that matters. But I wouldn't sell any of that. I'm going to sell my weekly salary. I'm going to accumulate salary as cash flow, and I'm going to use it to buy the blood. That's what Warren Buffett does. So I focus on what matters. And days like today, you really have to step back and think about how you look at markets. Are you going to be just, a degenerate and just jump into things because you have no idea what you're doing? Or are you going to really start to put what's being built into perspective? That's why it's so critical that we talked about macroeconomics for all those months. And that's why I have on the screen one of what I would say is the most interesting macroeconomic thinkers, because it's all related. If you're buying crypto assets and you haven't looked into Fed monetary policy at all, probably missing some context and perspective. Anyway, Dawdles rotated a bunch of AVAX to BTC this morning. How do you feel about that? Both macro assets. Bitcoin has its own narrative. Avalanche technically is deflationary, which is really cool. I think Avalanche will be very volatile as compared to Bitcoin. Bitcoin's going to be seriously volatile unto itself. I think Avalanche over the coming years has a lot to prove with regard to longevity. Bitcoin has longevity established. I think Avalanche is a good play. I guess the question really that you have to ask yourself is opportunity cost. Both of them aren't producing any money, and if they're not, maybe you could collateralize them to convert um, a stagnant piece of equity into a revenue generating position. That's another story. Anyway, very complicated. It's not so simple just to switch Avalanche to Bitcoin, Bitcoin to Avalanche or Phantom or whatever the hell you want to switch from and to and from. Very complicated choices and questions. Raul, Dogoshi, Sleeman, Noah, can you please explain what happens in a liquidation on Aave? Do you lose all your deposited assets or do you keep the borrowed ones? You keep the borrowed ones and your deposited assets are sold and a fee, a penalty is taken. Clearly, you keep your borrowed assets and you lose the penalty and you are paid the the sale price minus the penalty. That's the way a liquidation works. Best resources to understand taxable events better. Kind of blurring the lines between realization, swapping assets, and buying, selling NFTs. That's all a taxable event. Buying and selling NFTs, swapping assets, you're getting screwed with regard to taxes, creating taxable events all over the place. You want to avoid selling things. Um, that's it. Um, I prefer to focus on income when I think of taxation rather than capital gains, albeit it looks like the highest capital gains rate will be about 25%. I don't know. I have to look over tax policy for 2022. But in any case, the claim button is an income click, so it's not even a short-term capital gain. I don't think there's any way, if you press claim on Convex, I don't think there's any way to get that to be covered by a capital gains taxable rate as compared to an income taxable rate. Pretty sure that's clean cut income. Anyway. Chilled and baked. Hey, no, I've been speed running your channel lately. Thank you for the great content. I've been digging in. Have you any thoughts on the DeFi Kingdom? I do not. What's going on with Amplifort? The APY is at the ground. Well, the APY, no one's borrowing. So my hypothesis that would be max utilization during periods of negative rebase failed. So the hypothesis was invalidated. That's unfortunate. I thought it was a good hypothesis. I remember Ampleforth when it first started, and it recently caught my eye when Ampleforth was listed on a money market, and it's going to get listed on Banky as well if it's not already. And that is a narrative shift. So when a narrative shift happens that's listed on a money market, you do an evaluation and you throw up some hypotheses and you test for validity. So my hypothesis was that during a periods of negative rebase, utilization would remain high as folks speculate on long and short positions. So that was invalidated. That's unfortunate. So I'm not seeing much opportunity at the moment with regard to the way I like to manage a portfolio. So that position I have liquidated at this point. I have it on Phantom, denominated in MIM, and some of it's in Geist, and a couple of bucks I threw into this Phantom Ohm fork, which is probably not going to stay. I very much hesitate to tell folks when I deploy capital to something that I'm not going to keep, because folks hear me say that I bought something and that makes it good. It's not necessarily the case, and there's no guarantee I'm going to keep anything that I buy. And that's exactly what happened. I flip, I rotate, very small portions. The vast majority is allocated. It's long term, avoid capital gains. But if I'm taking 0.25% of the portfolio and doing a little rotation, it's not 30%. So a lot of folks get the wrong impression when I move around like 25, 30 grand because you don't have the perspective of the portfolio size. So please, for the love of God, don't move around 30% of the portfolio into shit like Ampleforth or Phantom or even Geist. I don't have 30% of the portfolio in Geist. So be very careful. That is probably the most important thing I try and avoid with my stream is folks that move way too much of their portfolio. And it's just not going to happen. Nothing's good is going to come from that. Anyway, that was a big digression. Frank Corp. Hi, Noah. Glad to be here again. A pleasure. Joe, never heard you talk about auto compounding protocols because I don't really auto compound anything. That's why. Axel B. Hey, Noah. Seems like you very much like UST stablecoin since it's not centralized or backed by centralized or fluctuating assets, but don't you have any concerns? It went down to 94 cents. 94 cents is still a great price. It went down 6% and it regained stability. I don't. These are all assets. Stablecoins don't have to be at $1. Stablecoins can fluctuate. If they fluctuate, maybe one stablecoin versus another becomes more trustworthy. It's all about trust. People are going to deploy capital to a stablecoin because they trust it's going to be at or near $1. If it dips to 94 cents and they trust that the stablecoin will regain peg, that's a heck of a bet. 94 cents back to $1 is a 6% rip to the upside. So if someone just bought something for 94 cents and they trust that it's highly likely to regain peg, that's a very good long position. Longing a stablecoin? What the heck? Folks think a stablecoin need to be $1. Yeah, that sentence didn't come out right. Point being, it's just an asset. An asset just has a price that is targeted. And that target doesn't have to actually be the case. It could vary to the upside and to the downside. And those have meanings. If it goes to the upside, it means something different than if it goes to the downside. I wouldn't worry about it too much. Clearly, if it's at 60 cents on the dollar for like 6 months, it might be a failed stablecoin. But if it's at 60 cents on a dollar and goes back to a dollar, it regained peg. That means margin calls were called, collateral was recollateralized, and the system was restabilized. Axel, and that leads me to ask you if you worry about choosing the best stablecoin, and if yes, which one works for you. No, I do not worry about choosing the best stablecoin. Daniel, what do you mean by fair monetary policy? What do I mean by fair monetary policy? I don't know, my friend. Alan, I read today that ABRA emits 6.6 0.66 billion spell a week. That's at 2 cents. That's 13.3 mil. If they're making 2.3 mil, then the protocol is a net loss of 11 mil a week. No thoughts. That is a true statement. How can you view PE ratios as a metric to take in consideration? Um, some folks look at that, and I think these protocols can be reduced to that. And I think, Jake, what you're hinting at is an analysis that will help, that will look at really what Alan's talking about, which is pretty cool. But that, I like to put these protocols into TradFi, traditional finance terms, and I don't do that right now. But I think there's a great deal of merit in doing that because, in theory, these assets are revenue generating. So Abracadabra produces revenue on a weekly basis, but it's also spending money. So the balance sheet right now is being used to encourage growth of the protocol. The treasury is being spent. And that's not a bad thing. That was the whole point of the treasury being constructed and created uh, as such. So it's not like a traditional company because a traditional company has to take investment from investors to build a treasury, whereas a treasury in the crypto space, in many regards, is created out of nothingness, and the value is established by arbitrage and incentive systems. So there's game theory involved. So it's like a traditional company. You can put it into those terms, which I do all the time when I'm talking about monetary policy and shit. But it still is different than just a traditional company. Anyway, that was actually an interesting little talk right there, Jake. Gillat, back in the late 2000s, I knew Facebook and Google would become big brothers. Instead of trying to warn people and being negative about it, I should have bought stock. Yeah, that would have been a good buy. Lewis, my man, is in the house. How are you? Overall thoughts on the merits of Geist. I'm flush with USDC, earning yield, but want to buy this pullback and begin a new platform revenue stream. Um, yeah, I like Geist. 47 cents. I have about 55 chip in there. Um, so here's the deal with Geist. 558. The difference between 558 and 146 comes from 50% penalties on vesting Geist being liquidated. So as this number approaches the staked Geist number, you're getting less and less liquidations, which means less vesting Geist is being sold, or at least claimed, speculatively being sold. 47 cents on a day like today is quite interesting. The market's quite bearish today, and 47 cents is where we were at like yesterday or the day before. So Geist is proving quite resilient. Went to 47 and then went to like 51, 52 a little bit earlier today, late yesterday. 47 cents is an interesting number. I think I may increase exposure a little bit. I'd love to get it cheaper. That's the deal, Lewis. I'd love to get this shit cheaper because the bottom line is 146% is coming from platform revenue. So $218 a day from the fees on the platform, which should get diluted as more Geist is emitted into circulation. More Geist is more lock. More lock is more dilution, more competition with the quantity staked, which should hopefully keep pace because every day you're making more Geist, so you're able to keep up with the dilution. But that'd be nice. That'd be nice. in the coming years, 4 years time, even if I don't do anything and I don't add more to the position. See, you have two things part of the crypto space. Folks are like, oh, it's only $218 is a shitload of money. Two, what about in 4 years? And maybe this is $2,000 a day or $20,000 a day. All right. So there's also the speculative component of the revenue stream. But that's what I like to look at. I speculate on the revenue stream rather than the price. I could give a shit about this. You see this? I could care less about that. What I care about is this. I care about revenue. Technically, in 10 weeks, I make all my money back. And that's not considering dilution, not considering debasement of the geist price. 40, maybe it goes from 47 cents to 40 cents. But this is the only number I care about. I don't care about this number. This could be 20 grand. It could go to 20 grand as long as my weekly revenue stays $5,700. All right, now that's what I'm interested in. That's what I'm looking at. That's what catches my eye. That's consistent with my ideology. That's what I like to see. Sir Joe, President, accounted for. Sir, it's a pleasure. Alejandro, no, I've checked out your vids for some months. Great thoughts shared with us crypto plebeians. What do you think about Andre's Keeper? I think it's a big deal. I think the stablecoin narrative is the biggest narrative in the crypto space. Maybe the China narrative is pretty big. But the stablecoin narrative is predominantly MIM spell, MIM, Frax, UST, and fixed Forex. That's the deal. Lone Tree, I'd like to clarify my understanding of your philosophy, if I may, Noah. Assets you purchase must either be revenue generating or, yes, well said, revenue generating or collateralizable. With obviously collateralizable assets having a fair amount of opportunity cost because you're only able to generate a revenue stream with a percent of the total value of the assets collateralized. And in the crypto space, you have to over collateralize significantly to decrease risk of liquidation, which means you have what, 20% loan to value, 30% for some assets. I mean, I don't know anyone that wouldn't do a 10% loan to value on like Memo or some serious volatile stuff. So you're not doing like, all right, fine, 90% on stable coins, but that's not all right, fine. You could collateralize stablecoins, but that's not the point you're trying to make. Yeah, revenue generating or collateralizable with collateralizable assets carrying a significant amount of opportunity cost. For the last 2 years, that's been the portfolio. Yes, sir. To take advantage of unrealized cap gains, growth of the assets over time, the ultimate asset, however, is one that provides both revenue and is borrowable again. Lone Tree. Now you hit the juice, the crypto juice. Well, that's what abracadabra. That's the big deal with abracadabra. Abracadabra is the first protocol that allows you to collateralize interest bearing assets. That is what folks are missing. Now, this doesn't account for the volatility of the price. What accounts for the volatility of the price is the general public deploying capital to these assets, having no idea what the fuck they're buying and buying it merely because of price action speculation. Merely because the price goes up and down with great volatility. But that is what abracadabra is. You're able to collateralize interest bearing assets. That's some next level shit right there. I don't need a price point to tell me whether it's next level. I'm sure as hell not longing or shorting it with a chart that looks like this. Oh man, longs are getting hammered. Wall crypto getting hammered. Fuck long positions. This thing's going to do a mean regression straight to the TWEP. Wow. Wow. This thing could go to a 1.2 cents and it's still bullish. Ha! That's extraordinary. So I'm just sitting cozy. My entry was down at this white circle. You know, it's painful to watch. Watch $2 million evaporate into nothingness. Is that painful? You know, I tell you guys that's not painful. I never had it. If I wouldn't even have, I wouldn't have liquidated. I would have sold it. I wouldn't have realized those capital gains. Fuck no. I'm not paying the government that money. No. I never had it. So I didn't lose it. And that's no diamond hands bullshit. That's no I'm a bag holder bullshit. I'm not paying the fucking taxes. I'm not realizing those capital gains. I know where this asset's going to be in the coming years. I know where my capital belongs. I deployed my capital early, and I'm going to let this shit play out. I'm not going to sit back and, wait for the top. Oh, I got to sell at the top. Oh, I got to buy it at the bottom when it dips down to the bottom, and I got to protect. I got to protect this loss right here, which is huge. It's like 40%. I got to protect it. I'm not going to sit here watching the chart and doing that shit. No. I'm going to force myself to get out of the house, spend time with the family, and focus on income. That's the deal. It's about time. If you want to protect deal with capital gains, short-term capital gains, it's going to be at the expense of time. And sure, you'll be able to protect maybe some extra money. And you're going to have to cut a fat fucking check. And I don't want to do either of that. I don't want to spend that extra time. And I don't want to take that extra risk to try and buy the bottom and sell the top. And I sure as hell don't want to cut that fat check. I don't care if I make more money. I don't want to cut that fat check. And I don't care if anyone says, the taxes are going to get in the way of you making as much money as possible. I don't want to make as much money as possible. I want to maintain my sanity. Do I look like a person that has issues maintaining sanity? Yes. I get a little crazy sometimes. So I got to focus on shit that helps keep me sane. And worrying about the tops and the bottoms, that's going to make you fucking go nuts. Instead, focus on the fact that through all of this, boys and girls, through all of this shit, nothing has changed. Not a goddamn thing has changed. The narrative's identical. So what does this mean? What does this top and bottom mean? It means jack shit. Okay? It means nothing. It's just stupid kids buying low, selling high. Frankly, it's kids buying high and selling low, having no idea what they're doing, having no conviction, no narrative, no understanding of macroeconomics, no nothing. Am I going to fall into that? Am I going to play their game? Fuck no. Am I going to drive myself nuts over that? Hell no. I wish I was around in 1999. I would have billions of dollars of Amazon and Microsoft stock. I was a kid. Didn't know shit back then. All right, Lone Tree, that was a big answer to a big question. Bratino Man. Hey, Noah, can you take some time to talk about Geist tokenomics? Well, I don't fully know how much is their max mint, how much is remaining in circulation. I haven't done too much due diligence. All I'm focusing on is the price point, trying to find the bottom. I look forward to the lot Geist approaching stake Geist APR, which to me would indicate nearing of a bottom, albeit the price on a day like today is extraordinary, 47 cents, and I like the numbers that I see. So I'm tempted to deploy a little bit more capital. A little spec play. This Fant Ohm is obviously an Ohm fork. We'll see what it does. It's I think there's going to be so many Ohm forks, and I don't know. No one knows the team, but they have a decent sized multi sig, and they have been iterating. Max risk. I don't know. Take $1,000 and it turns into 200 grand next year. Hope you do. This is the type of shit that's 0.1% of the portfolio. If you have a $100,000 portfolio, you deploy $100. I'm not going to say, well, I'm going to say this again. If you have a $100,000 portfolio, this is the type of shit that you throw $100 at. Okay? Don't throw 30% of your portfolio and fuck up your portfolio and tell me, you made a mistake and you did it your way. For the love of God. Otherwise, I don't talk about stuff like this. But this caught my eye because they added S spell. That's cool. That's innovative. That's quite innovative. It comes up short on documentation. It comes up short on governance. Discord. It's got actually some decent governance proposals, speculatively. At least there is governance. How it's managed, how the multi-sig, how the contracts are managed, who's coding the software. I don't fucking know. That's where the speculation comes in. But S-Bell is what caught my eye. 0.1%. Don't mess it up. I hope that helps, Bertino, man. Quantified, how did you prepare for today, Cap? I did absolutely nothing. I woke up, I had breakfast. I'm about to go find some lunch. And I like that question. That was originally where I was going to try and go with the stream. How did you prepare for today? I did nothing. I was prepared. I'm always prepared. The preparation's up here mentally. I tell the wife every morning when she sees the balance, she's like, "Hoo." And I'm like, honey, that's going to go bye-bye. I tell her, you're going to watch that number get cut in half. And I tell her, and I tell her, I tell her. That's how I prepared for today, because I know what's going to happen. And I knew exactly the sequence of events that would play out. Because I've been there, done that, seen it before. Except this time it's different. And I know better. And it's not about selling the top. Oh, this time I'm going to sell the top. This time I'm going to sell the top. Every schmuck out there thinks they're going to sell the top. Stupid waste of time. Lewis, don't leverage, my brother. Or please be prudent. Minimal use of leverage. If you got or get liquidated, you were or were over leverage. Damn right. Last couple questions. See what I could get through today. Took a position on BLIZZ Avalanche a couple days ago. Given rewards on BLIZZ are also a bunch of BTC, by the way. Pretty cool. Yeah, I noticed that. Slippage too high. Well, bear in mind, those are deposited tokens. You have to withdraw them first. So you don't want to convert. You don't want to swap. You want to withdraw. Okay? First step. You're not going to have liquidity on the AMMs, on Joe or anything. One thing I thought about with Geist is what is the use case for Geist token once all tokens have been issued? Revenue share. It's all about revenue share and governance. Card Toy subs up. Captain Weber's in the house. Present and accounted for. Sure. And my daughter's been going to karate, and yes, sir. Everything is sir. Yes, sir. And I love that because it gets her into the notion of compliance and respect and stuff like that. Yes, sir. What about MUSD, M stable? Cool stuff. MTA has been backburnered for a bit in my mind. Hilda's in the house. How are you? Hope everything's okay. Hey, no, it's just see you doing fine. Happy about that. Just came back from vacation. Ooh, you came back from vacation to all us Incoomer frogs. Yeah, we are a bunch of Incoomers here, aren't we? Flying Frog. Yes, indeed. Daniel. Kids. It's the kids buying high and selling low. That's how they're the ones who fuck up all these charts. One curious few. Do I look like a person that has issues maintaining sanity? I haven't looked at Grailers, Girish. I haven't. I think I'm going to wrap it up. Liv W, do you think BLIZZ and Avalanche could have more upside long term with Avalanche Rush? Well, it's not about upside. Upside on what? The price of BLIZZ? The price of BLIZZ just goes down. You see what I'm saying? A little bit of monetary policy. I have it here. Let's take a look at BLIZZ. Connect. Boop. 2,000%. BLIZZ is at 88 cents. I heard some folks got a piece at 60 cents. It ripped up. Let's see. I expect it to go down. Look at the lock BLIZZ. People are still liquidating. If they weren't liquidating, the lock BLIZZ would be closer to 400%. These two numbers would be closer together. I think BLIZZ finds a bottom somewhere around 20, 30 cents. I hope Geist finds a bottom right around there as well. I'm just waiting. 30 cents. 20s. Come on, baby. These numbers got to go down. These numbers got to go down with the APRs floating around. People are selling the crap out of it. Albeit, it's a good incentive to buy it as well. What are we at? 2 bill in market size. What am I checking on Aave? Because Phantom does not have Aave, which means Geist has no Aave competitor, whereas BLIZZ on Avalanche has an Aave as a competitor. Um, Daniel, how do you go about creating your own DeFi app? I work in crypto, but the marketing side, no coding experience. Coding experience is, well, you have to know Solidity or Viper. I'd probably opt for Solidity. I want to dabble with Viper, but those boys over in Curve are next level with regard to Viper. Solidity, I get. I get it. It has a bit of a Python feel, in my opinion. Um, not too difficult to handle. It's not too difficult. It's the hardest thing is what to build. It's very rare that you find the new concept to execute on. Very rare. That's why a lot of the stuff we see nowadays are forks. Aquix. Hey man, what do you think of time? I think Wonderland's a big deal, and I think they have a massive, massive treasury at this point. And I look forward to buying at the price per time, or the value per time, which is this. I'll show you guys. Enter app, close, close. So I look forward to buying somewhere closer to that price, maybe 250. Let's see if Ohm gets down to 250. Let's see if time gets down to like 1500, 2000. It's already down to 75. So maybe if we have a really strong deflationary impulse, we'll get down to like 2000, 2500. That'll be interesting. And then I'd buy because look at the treasury. They have a $500 million in treasury. That's ridiculous. Liv W. I've heard about Snowdog, find it interesting. I haven't done extensive due diligence, but I know why you're saying what it did yesterday. Serious stuff. Brandon, Noah, new to the stream. What's your plan if BTC goes parabolic? Any idea what price you'll start taking profits? No, the Bitcoin is never to be sold. Bitcoin is to be collateralized and used to generate revenue streams. I don't believe in selling assets. Uh, I've really subscribed to Warren Buffett's ideology. He doesn't sell assets. He does not a buy low, sell high kind of guy. Warren Buffett is pure cash flow. It's all about cash flow. And what he does is he accumulates cash flow during periods of exuberance, which has basically been like the last years. It's $140 billion in cash. And when the shit hits the fan and we have a strong deflationary impulse and the markets fall apart, he's going to come in and buy everything for pennies on the dollar. He's going to buy it on the cheap. And that's the same thing we do in the crypto space. But Bitcoin is a bit different. Bitcoin is like a treasury, but it's not. It's like a currency, but it's not. It's like a bond, but it's not. Whatever it is, there's no reason to ever sell it because if Bitcoin goes to 300 grand and crashes to 80 grand, you're up huge. And then in 5 years' time, it's going to be back to 3, 4, 5, 600 grand. I am not a buy low, sell high kind of guy. I don't give a crap if Bitcoin goes to 300 grand and then it goes back to 80. Uh, I, 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 some people be like, "That's crazy. You missed out on all that money." No, it's not crazy. It's something that I believe is a better way to approach the markets. It's a better way to approach the markets. Trying to time the top and time the bottom. You'll drive yourself nuts. And if you want, Brandon, you want to see my opinion about driving myself nuts. Earlier in the stream, I said, that, do I look like a person that needs to be careful, maintaining sanity? Yeah, I got to watch myself. And trying to find the top and find the bottom is going to drive me nuts. So I'm not doing that. I'm not doing it. I've done it to myself. I know the effect it has. It'll drive you crazy, and I'm not doing it to myself this time or ever again. I have withdrawn them. They're in my wallet. Try the swap, the Avex, the slippage to. I do not know. I don't have anything. I haven't dabbled with it, so I can't respond to you, Raul, with anything of experience. Dan, joining late today. You're always welcome, my friend. Okay, let's wrap it up, boys and girls. Thursday, November 18th at 12:21 p.m. As always, a pleasure. After party on Discord. I'm going to get to the Ask Vids in a little bit today, but otherwise, I should be able to get a stream out tomorrow. So I wish you all a wonderful day. I'll see you then. Peace.